Hello, good people. This is Emmanuel Sani Safali bringing you yet another episode of The Promise Show. And this time around, we want to talk about the MSMEs and their resilience in the country or in Uganda and how they're managing to cope. What are the MSMEs? Those are the medium, small, and micro enterprises in our country. And oftentimes, there was a report that has been published by Financial Sector Deepening, Uganda, which actually talked about this report and it gave very many solutions. It gave findings and also solutions on how we can handle the resilience, because many of them oftentimes start but are not able to sustain beyond 1 year of anniversary. So how can we improve our business resilience? This is a report that made some research, some good findings. Let's go through it, and possibly we shall also give a solution as insurers that we can provide to the MSMEs and the SME sector of this world. So let's go in for a short break and come back and delve deeper into these findings. Welcome back to the Promise Show. Now, this is a page that shows the findings. Let's go through it very briefly. Okay, so as you can see, there's a pie chart, then there are also some findings. You can see that the biggest chunk of the businesses, or the SMEs and the MSMEs in Uganda, actually 49% services like telecoms, services like, the general digital platforms that you use to do business on a daily basis. And then 33% are commerce and trade, people who are importing and exporting. And this is the bulk of our business in Uganda. And you can see that these SMEs, yes, they're diverse and vital to the economy because they actually contribute 95% of all businesses in the country. And they employ over 3.5 million people. So they also contribute a very significant proportion, that is 40% of the GDP. And this is no mean feat, but we can still see that majority of the micro farms, 71% are micro, meaning their turnover is so small compared to the small businesses. Those are covering about 18%. And 11% are actually the medium size. So those ones have another significant contribution to the SME, but they are still very few. Then key to note also the digital access. Just 95%, over 95%, we all use phones these days, and I'm sure you're also getting me on the phone, possibly, or on the laptop. But we all use phones, your cell phones for business, yet only 37% have internet access, and that is a challenge. Then location-wise, only 66% have formal business and premises. And financial inclusion, 60% are banked, meaning 55%, if 60% are banked, that means 40% are not banked. And 55% use mobile money, that means 45% don't use mobile money. Okay, and then key to note also here we have the farming SMEs and then the non-farming SMEs. Yes, last time we talked about agri-insurance, which also mentioned that 67% of the farming SMEs experience harvest crop failure and all that. We discussed that deeper, but let's go into the non-farming. So 65% of the non-farming SMEs have medical emergencies. That's the main risk. And then the coping mechanism, we're saying that 50% go to public health facility, while 40% go to private health facility, as they face a significant out-of-pocket expense, with less than 1% having health insurance. But of course, there's also so much. Let's go now directly to what the major findings that we saw. There's a vulnerability that exhibited as they're underserved by insurance. So only 42% do not know how it works actually, So that is also very key to note. And those who don't know the benefits of insurance, over 24%, they don't know what is in it for them. And that is what we want to address today. There are those who cannot afford, 19%. and those who don't know how to get it are just 9%. So possibly that is the smallest percentage. The rest can always know where to get it. And very soon we also want to show you these providers. So with these few findings, and they are quite a number, let's also go for a short break and come back now with the solution that insurers have for you. Keep tuned. Welcome back to the last episode, or the last segment of this show. And this is a solution that has been well researched and well provided by a number of insurers that I want us to discuss briefly. Because for any SME, we know that majority are renting. They don't own their business premises, but they are renting. Others are even working outside of home. I mean, they're working at their homes, so they're working digitally, but they always have their stock. So in business, we always want to look at what is the maximum stock value that you have at any one point. So let's say any business premises, whether it is a fuel station, whether it's a supermarket, whether it's a shop, a bar, pharmacies, all these can be covered, but we need to know what is the maximum stock value at any one point. So this is an illustration of a business worth, say, 500 million. And when you talk about the maximum stock value, this such a business, whether a fuel station, whether a pharmacy, could be having actually stock worth 100 million on any given day. But usually there are peak seasons. They have a value. They usually stock highest during the peak times like Christmas or Easter. So that is the value that we are interested in as insurers at any one point in a year. What is the maximum exposure that you can have at any one time, such that that is the value that the insurers will pick up to compensate you should anything happen. So that is the key value that we note. And because there are almost 7 benefits or 7 classes of insurance that we're looking at, we get just an average rate that we use, and then we show you how much you can be charged. So very quickly, if you look into how we charge this client, having items worth say 500, we're going to charge him about 4.2 million shillings. That is for the whole year. But because we say there are many people who can't afford, we have brought in bankers, what we call insurance premium financing, whereby they will charge you a small interest of about say 10% for the whole year at the banks. So you write for them checks, 10 checks, as you can see on the last slide. On the top page, they'll pay about 472,000 monthly for 10 months. So that means there will be that small markup of about there'll be about 400,000, but that is because you're paying over long term, 10 months. But if you had all the money at once, you wouldn't meet that expense. But let's also dig, what is it that you're benefiting once you pay these premiums? What is the insurance company going to do for you? So here you're seeing fire and allied perils. This is in case your business, as with many of our premises we know, possibly they're on arcades, some of them are in the marketplace, but they are usually next to each other. So you're renting, as you can see that we have assumed that you're renting. If your stock should be as about 450 million, then the tenants' fixtures and fittings, those are the chairs that the computers that you use to facilitate the business, should also contribute a certain percentage of the maximum business value, such that it at least 10% for the contents, and then 90% for your stock. And that one we shall cover 100%. Then there's also something we call business interruption under section 2, which comes as a result of fire hazards. And by the way, when you talk about fire and allied perils, we also talk about anything that is going to totally destroy your premises as a business. Even floods, if you're in the business of say shoes, or you're in business of selling maize flour, anything can happen and it floods your business, and that's your stock is actually destroyed. So with that, we can also take it as allied peril under fire. Things like landslides. In Bududa, we have seen those situations. So in case those things happen, we are going to compensate you because you had actually taken out insurance. Now, business interruption comes as a result of that incident, the fire challenge. Has it happened, whether it's electric, whether it is floods, because it will take some time for your premises to be put back. We shall have to give you some money, about 15% of your business value. In this case, it will be about 75 million within 180 days, within 6 months, or within 4 months, to help you maybe get another relocation so that you are back in business. And that is the essence of insurance, so that you don't lose any time or profit or income. You always get some more to help you get back in business. Then thirdly, there is also burglary. We know oftentimes there's a lot of theft. People break in and they steal your merchandise, your stock. So why do you take all that risk? Here, as much as we have askaris at these places, the places that you rent your businesses, some of these askaris are compromised, and thus you start from scratch because they'll steal and you have no evidence or a way of getting them. So, but if you had some kind of insurance and we see the evidence, we can easily compensate such a thing, and usually look at, say, 10% of the business value. But if you're in a business of, say, wires, electronics, you feel that this percentage is low, when they can steal everything out, then we can also look at the full declared value. That's also another detail we can get into later, or one-on-one. Then money insurance. Oftentimes, money insurance was actually a preserve of just the banking institutions and the microfinances. Traders were not usually given money insurance. But of late, the insurers have also come up and realized we need to do something for the traders, because they also carry lots of monies at their premises and they do a lot of transactions. So we can cover the money in transit, money in premises, money with authorized officers. You have your distributors, managers, things like those. All those can be covered. And also the damage to the safe, because we know that you must be having a safe in your premises. So all that can be taken care of under the money section. And we also look at, say here, about 5% of the business value. So the most important thing, if you get us the value, we can work out something quickly and gives you something like a comprehensive cover. Let's go through quickly number 5 to 7. Then there's goods in transit. Many times, yes, as you have seen the new normal, many times we are now doing digital business. You're transacting. Someone pays you or makes an order, and they hope that you're going to deliver it such that you are paid and they access that service, or good. But what happens when that item that you have sold has not reached the intended user? It gets damaged on the way. And many times we have seen many Indians and Israelites merchants using this to their advantage, because they know that there is actually one of their key unique selling points is that, you know what, we are going to deliver to you whether anything happens on the way. Let's say, for instance, you're into hardware business and you're delivering something to Fort Portal, and you actually promise a client your items are going to reach. But midway, because you have hired a truck driver who don't know how he stays, how he drives, he actually causes an accident and the items are damaged maybe midway, somewhere in Uganda. So because you had insurance, the insurance company is going to compensate your client worth, say, 50 million, about 10% of the business value of this. So it's something that we can work out, and yet in terms of the premium, it is very affordable. Lastly, there is public liability. In case your business is sued for having caused some damages. We have seen this with pharmacy businesses, supermarket, things that sell possibly expired items, or the items were not expired, but something must have happened, or they cause food poisoning. Someone can sue you. So should anything happen at your premises and it's going to affect your neighbors or your clients, and they can actually sue you, this can also come in handy. So you look at a value, say, of about 100 million or 50 million in case they have to sue you. Last but not least is the group personal accident or workers' compensation. This is very key. Yes, we have seen many people don't, in informal setup, they don't hire on contracts for their workers. But we can agree on a value of, say 10 million or 1 million per person You know, if you have 10 employees, you're covering, say, about 10 million should anyone die as a result of an accident at the workplace, such that you have a total value of about 900 millions. These are insurance benefits, but you're only charging you a premium of about 4.2 million. So this is how affordable or interesting insurance can be, because should any of these risks happen, you can easily get wiped up of business. Yet, and that's why that is another finding that this financial sector deepening report found out, that many of the businesses are actually just one catastrophe or one incident away from bankruptcy. So let's not be those kind of businesses. Let us be wiser. Let us know that we are armed now with this information. Let's just embrace these solutions that have been provided to you by the insurance companies. So we are going to hear more from them. I'm excited that we are about to reach bigger media space so that people are sensitized about the relevance of insurance. We're going to bring the key stakeholders to you and to give you the trust and the confidence that these companies are actually going to pay you should anything happen to you. So till next time, I remain Emmanuel Sonyi Safali, bringing you the Promise Show. Keep tuned, hope for the best while preparing for the worst. Thank you.